traders at UBA expect the bond market to continue its bullish run on the back of market forces with interest on the short end of the curve. However, emphasis remains on the long end of the T-bills curve. Chuka Nwachukwu, head of ALM and balance sheet management at UBA, joins me now for more market discussions. Chuka, thank you so much for joining us on the show today. Let's have your reading of how the market has reacted so far. First and foremost, we finally have the Q4 bond calendars released by the Debt Management Office. Let's talk about the expectations here in the market and the response so far.
Okay, thank you, David. The market has just traded 2 days. Monday was public holiday. We've seen, like you rightly mentioned, we've seen bullish sentiment. This is as a result of high liquidity in the system. Friday last week, FAC came in, well over 900 billion was shared among the 3 sectors of the government, the state, local government, and then the federal government. So that liquidity still remained in the market. In fact, market liquidity opened at 170 billion up as at yesterday, and then as well as this morning. And now that has brought in a lot of bullish sentiment in the both markets. I'll start with the bond market. Like you said earlier, we've seen bullish sentiment, especially on the shorter end of the curve, 2025, 2026, and then, of course, 2029. On the bill side as well, we've seen bullish sentiment, but this time around, interest is more on the 1-year bill. This bill came out last auction at 11.37. It's currently trading at 10 levels.
And in terms of how investors are also leaning now, should we also expect any surprise shift? We're seeing for the bond side, investors are largely leaning to the 2025, 2026, and 2028, and also on the T-bills, and we're also seeing the September 2024 bills being the receiving the most focus at this point in time. Do you think going further into the month we might likely see any surprise shift in terms of leanings?
I think basically those the activity on the shorter end of the bond especially is for in terms of liquidity management, rather than lose some of these funds at 0% CRL debit. You just invest in the shorter end, and so if you look at the rate on the longer end of the T-bills market around 10 levels, it makes more sense to invest, on the shorter end of the bond market at 13, 14 levels, and so that's why we've seen the activity on that end. However, the longer end, like you mentioned, the interest is usually on the PFAs, and so they find this longer end, especially 2053 and then the 2049. They find it, they find more interest in investing at the longer end of the curve. So for going into the end of the year, we will see the end of November when banks and then companies are winding down, taking profits for the end of the year.
And Chuka, while the market is also awaiting fresh pronouncement from the CBN governor in terms of monetary policy leanings as well, now how would you say this is also filtering the market beyond the current wait and see, because so many investors are just waiting for this pronouncement? They're still playing safe for now, but how do you think the market is taking this?
Yeah, I think the market has reacted positively, especially with the caliber of people that have just been appointed and confirmed by the Senate into the CBN authority. If you look at the antecedent of the governor, for example, Mr. Caloso, you know that he has the pedigree, and then so the market has reacted, as well as the other executives, the deputy governors. So the market has reacted positively, and so people are anticipating and carefully, eagerly waiting for a pronouncement as regard their policy direction, and once that is clear and that is done, I think confidence will come in back.
And we saw the gradual appreciation in the currency market as well. The Naira appreciated about 133 basis points just at the close of yesterday. But the concern here is still that widening spread between the INE window and then the parallel market. For you, how do you see this appreciation being sustained?
Yeah, Naira appreciated, like you rightly mentioned, is currently trading at 7.45 from 750, 55 levels as yesterday. And so the demand is still there, like I keep saying, as long as the demand outweighs supply, the rate will continue to go up. However, with systematic policy, especially on the fiscal side and then the policies and the monetary side, we should begin to see confidence, and then when that happens, we begin to see the appreciation we all have anticipated.
Yes, Chuka, thank you so much for your time on the show today. We'll leave the conversation here for now. That was Chuka Nwachukwu, Head of ALM and Balance Sheet Management at UBA.